Assalamualaikum warahmatullahi wabarakatuh. My name is Azizah binti Abdul Aziz. Me and my team members has been assigned to present chapter 25, which is other assurance services. In this chapter, we will dive into the world of review and completion engagement. And hopefully, by the end of this chapter, we will able to understand the level of assurance and evidence requirement for review and completion services. Next, I will explain further on the other assurance service mentions, which is first review services. A review service engagement is designed to allow the accountant to express limited assurance that the financial statements are in accordance with approved accounting standard. Instead of a full audit with detailed tests, we perform the analytical procedure, such as analyzing the trend and compare the financial data. And review service also are less expensive and faster than the full audit, making them suitable for companies that don't require the highest level of assurance. By looking at the graph given, is illustrate the direct relationship between evidence accumulation and assurance attained. For example, when minimal evidence is collected, as in a completion engagement, the level of assurance is virtually non-existent. But as more evidence is accumulated, as in a review engagement, the level of assurance is increases to a limited extent. Finally, in an audit where extensive evidence is collected and analyzed, the highest level of assurance is attained. This demonstrates that the truthfulness of evidence gathering is crucial in determining the reliability of the conclusion drawn. The standard for review of financial statements are called ISRE 2400, Engagement to Review Historical Financial Statement. This standard provides guidance on the objective of the review engagement, the procedure that should be performed during the review, and the requirement for the review report. This is to ensure consistency and quality during conducting the review engagement. The effectiveness of a review engagement hinges on the appropriate application of specific procedure. A review of financial statement involves several key steps. First, we obtain the industry knowledge. Second, we get to know the client, include the operation and and their financial situation. Then, we make inquiries of management. We ask the question, and fourth, we perform the analytical procedure such as analyze the trend, and then we obtain the representation letter, and lastly, we document all our work to ensure that we can provide a limited assurance on the accuracy of the company's financial statement. This is the example of form of review report. This report is provide a clear and concise summary of the scope and limitation of the review engagement, emphasize the difference between a review and an audit. Other than review service, we also have compilation service. The standard for compilation of financial statement are called ISRS 4410 compilation engagement. We use this standard to ensure that all compilation of engagement are conducted consistently and with high level of quality regardless of who is performing the work. The definition of compilation service is one in which accountant present to a client or third party their financial statement the accountant has prepared, but the CPA firm does not express any assurance of the statement. In other words, we are simply helping the client present the information they have in a proper format, but we does not provide any assurance on the accuracy or reliability of the financial statement.
Assalamualaikum and hi, my name is Muhammad Akmal bin Aminuddin. I will continue about the requirement for compilation. In compilation engagement, an accountant must establish an understanding with the client in the written engagement letter about the objective of the engagement, type and limitation of the services to be provided, including acknowledgement that the accountant does not obtain any assurance about the financial statement, and also a description of the report if a report is to be used. Second, the accountant must to possess knowledge about the accounting principle and practices of client industry, because different industries have different accounting standard, regulation and practices. Third, the accountant need to know the client, which is the nature of the business, accounting principle used by client, and also the content of financial statements. So it will help the accountant in compilation. Fourth, the accountant must determine whether the client information is satisfactory. The accountant need to assess whether the information provided by the client appears to be complete and free from obvious errors. Fifth, the accountant need to review compiled financial statements for any obvious omissions or errors in met and approved accounting standards. This may involve checking for the proper application of accounting principles and the use of appropriate accounting estimates. We go next to the form of compilation report. There are three different compilation report, which is the first one is full disclosure, second no disclosure, and the third one is compilation without independence. Next, there are some requirements for the three reports. All compilation report must have a report title that says Accountant's Compilation Report. Second, the report must contain the date of completion of the compilation, which is the date of the accountant's report. Third, each page of financial statement compiled by the accountant should state "See Accountant's Compilation Report." And the last one is auditors must include the same modification in the compilation report if clients fail to follow accounting standards. For full disclosure, it requires disclosure in accordance with accounting standards, the same as for audited financial statements or reviews. This report includes a clear statement that the accountant has not audited or reviewed financial statements and not express opinion or assurance. For no disclosure, it shows that the accountant is not independent of the client. Typically, this type of statement is used primarily for management purposes. For example of this compilation, if the accountant is an employee of the client company, they might not issue a separate compilation report. Lastly, compilation without evidence. This is a specific situation where the accountant are not independent of the client. The CPA firm can issue compilation report with a full or omitted disclosure, even if it is not independent of the client company. When the accountant lacks independence, they will provide a letter to client at the last paragraph stating that they are not independent with respect to the company. This is an example of full disclosure compilation. As we can see, in this report, it stated that the accountant has not audited or reviewed the financial statements. This means that they have not performed any procedures to express opinion whether the statements are fairly presented in accordance with accounting principles. Other than that, this report clearly states that the accountant does not express opinion or provide any assurance about the financial statements. We move to the next example, which is compilation report with no disclosure. In this report, it different from compilation full disclosure, where they clearly mention that management has elected to omit substantially all of the disclosure and the statement of cash flows required by accounting principles. So we can see that The accountant adds some appropriate word after the conclusion paragraph of the standard population report when the accountant compiles statements without disclosure. So we move to the next objective to see how to review interim financial information for public companies. So I will pass to the next presenter to present your slide. Thank you.
Assalamualaikum and hi, I am Wanuno binti Wan Asman. I would like to continue for the next part, which is review of interim financial information for public companies. Like review service, a public company interim review includes the 5 requirements for review service engagement. The SC requires quarterly financial statements to be reviewed by the company's external auditor. The purpose of this review is to ensure the financial data shared with stakeholders is accurate and reliable. This is not a full audit but follows specific review service guidelines. For example, large company like Petronas sharing its quarterly earnings, their financial data needs to be reviewed by the auditor to ensure no major errors before sharing with investors or regulators. Next, client inquiries and analytical procedures. A review is substantially less in scope than an audit of financial statements. A review is not as detailed as a full audit. It mainly involves asking questions like inquiries and analyzing financial trends or patterns in the data. The goal is to check for anything unusual but not to dig deeply into every detail. For example, if the company's profit suddenly increased, the auditors might ask what caused this change instead of verifying every sale made by the company. Lastly, ISRE 2410 standards. The review is conducted according to the international standards on review engagement. A review for a public company does not provide a basis for expressing a positive form opinion. Reviews follow a global standard called ISRE 2410 to ensure consistency and quality across different companies. However, reviews only provide limited assurance, meaning auditors won't give a strong opinion that everything is 100% correct. For example, if there are no major issues found, the auditor might say, based on our review, we didn't find any problems, but they won't say everything is perfect. Next, I will discuss for learning objective 3, which is about distinguish AICPA attestation standards from auditing standards and know the type of engagements to which they apply. AICPA attestation standards focus on verifying specific information, while auditing standards are broader and more detailed. Attestation includes services like reviews, while auditing involve full checks of financial statements. For example, if a company wants to confirm only its inventory value, it might use an attestation service. If it wants to check its entire financial statements, it would request to audit. Attestation service include 3 main types. First, examination, a detailed check like an audit providing high assurance. Second, review, a limited check providing moderate assurance. Third, agreed upon procedures. Specific checks decide between the company and the auditor. Each type provides a different level of assurance and evidence, which is high, moderate, or varying assurance, positive, negative, or finding conclusions. For example, a company might ask for a review of its revenue and examination of its financial statements, or agreed upon checks on its payroll process. We go to the next part. Learning objective 4 is about understand the nature of web trust and SysTrust assurance service. Web trust and SysTrust are assurance service designed to build trust. Web trust focus on assuring websites are secure for e-commerce, while SysTrust checks IT system for reliability and security. For example, a website like Shopee might use web trust service to ensure customers feel safe making online purchase. Web Trust Service. In Web Trust attestation engagement, a client engages a CPA to provide reasonable assurance that a company's website complies with certain trust service principles and criteria for one or more aspects of e-commerce activities. Web Trust ensures a company websites follow security and trust standards for e-commerce. This helps business prove to customers that their website is safe to use. For example, if you see a Web Trust seal on an online store, it means the website has been reviewed and meets security standards, making customers feel safe to shop at the online shopping. Web Trust Seal. The objective of Web Trust Service is to increase consumer confidence over e-commerce transactions with the usage of public key infrastructure. Certification authority that has met the Web Trust principles and criteria is eligible to display the prestigious Web Trust seal on their website. Web Trust use advanced security tools like PKI to protect online transactions. CAS that meet Web Trust standards can display as a Web Trust seal showing customers that the website is secure. For example, if a bank's website shows the Web Trust seal, customers know their personal and financial data is safe during online transactions. List of certification authorities and recognition. Certification authorities must display the Web Trust seal on their website. Certification authorities are organizations approved to issue digital certificates for website security. They must follow website trust standards and display the seal on their websites to show compliance. For example, in Malaysia, MSC Trustgate is a certification authority that ensures websites are safe and secure. As you can see on the slide, there were the examples of websites with Web Trust seal. Websites like RoughTech and MSC Trustgate display the website trust seal to show the follow security standards. This helps boost trust with users who visit the websites. For example, when you visit this website, you can feel confident that your data is protected because they meet Web Trust security standards.
Hi, Assalamualaikum. My name is Maisara binti Tajuddin. I will continue to present about Web Trust services. For this slide, it is about three main types of digital certificates. Digital certificates are electronic identification used to secure online communication, to confirm identities, and to ensure data integrity. They are issued by certification authorities. For the first point, we have Secure Socket Layer Certificate ataupun SSL Certificate, where a secure communication between a website and its visitor. For example, in Malaysia, we have Maybank to You website or CIMB Clicks, where they use SSL certificate to encrypt the data, such as password or any personal information, to ensure safe online banking. And how it works is, when you visit a secure website, you will see a padlock icon in your browser. This is mean that the site is using SSL to keep your connection safe. For the second one, is a software signing certificate. This one is for verifying the authenticity of software or application. For example, when we download MySejahtera or any government services application, this certificate always to ensure the apps is safe. It works when developers sign their software with this certificate, and our computer or phone can check if the software is from a trusted sources or not. The last point we have is client certificate, where it verifies the identity of individual or organization in online transaction. For example, in LHDN Malaysia, they use digital ID to ensure that only authorized user can access the sensitive text information. When we log in or sign in the document, our identity is verified using this certificate. For this slide, it explains more about Secure Socket Layer Certificate, which is SSL certificate. This certificate is like an online security that proves a website is real and trustworthy. This certificate has two important things. For the first one is to authenticate the website identity, where it confirms that the website really belongs to the company or organization. Second one is encrypting the data, where it creates a secure link between your web browser and the website, so any information you share, like password or any credit card details, is protected and can't be stolen. For this slide, this is about why do companies need SSL certificate. This is because to secure the online transaction, to keep customer data private and safe from hackers, and to build trust by showing user the website is secure. For example, we have like Shopee and Lazada website. where they use SSL certificate to protect your payment details when we shopping online. To ensure customer feel safe, sharing sensitive information, which can help the business maintain their reputation and customer trust. And here we have the logo represent Web Trust certified services provided by organization to ensure online security. They show that a website or service is trustworthy, secure, and follows strong data protection standard. Some example that we can have in Malaysia is PayPal verified, where it used for secure online transaction. Other one is McAfee Secure, where it show a site is safe for malware. And other one we can have VeriSign company to protect data with encryption and identity verification. This slide is about CIMB security policy. This explains how CIMB ensure customer data and transactions are secure. For the first one, we have data privacy, confidentiality, and integrity, where CIMB will use advanced encryption and monitoring to keep customer data safe and unaltered. For example, when you do online banking, CIMB will ensure our personal information and financial detail will remain private. Second one, we have authentication, where CIMB verify the identity of user before allowing access to account or any transaction. For example, like using OTP, which is one-time password for secure login. Next one, we have access and system design, where the bank limit access to sensitive information and use 24/7 hour monitoring to prevent unauthorized access. Last one, we have Web Trust Security Assurance, where CIMB complies with Web Trust principle to maintain the security and trust of their system. For example, when we log into CIMB Click's website to check our bank balance or make a transfer, Web Trust principle and security policy will ensure our connection is encrypted and only authorized person can access our account and customer data stay safe from any hackers. For the last slide by me, this slide will explain about 5 trust services principle, which are standard used to evaluate and ensure the security and reliability of the system. For the first one is security, where they ensure that the system is protected from unauthorized access, both physical and logically. Physical is like any restricted area. Logically is about password or any firewalls. For example, Maybank will use firewall and any multi-factor authentication to prevent any hackers from access customer accounts. Second one is availability, where to ensure that the system is available and operational as promised or expected. For example, Touch and Go e-wallet will ensure that the app is always online and ready for users to make payment without interruption. For the third one is processing integrity. They will ensure that the data processing is accurate, complete, and authorized. For example, when we filling taxes via LHDN application, which is my tax portal, the system will ensure that our details are processed correctly without any error. Next one is online privacy, where they protect personal information collected from user and will ensure it is used and stored according to agreed term. For example, Shopee will protect our personal data such as address and payment details and does not share them without our permission. Last one is confidentiality, to ensure that sensitive information is kept private and only shared with authorized person only. For example, CIMB website will keep customer financial information confidential and does not disclose it without any concern. Why these principles are important is to ensure that the customer data is secure, system are reliable, and the last one is the privacy is respected. That's all for me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nabila Nuhanis binti Muhammad Sabri, and I will continue with the next part of our presentation, which is a focusing on the Sistra service, internal control report, and also prospective financial segment. So let's we start with the Sistra service and their importance in ensuring system reliability. So in this slide, it mentioned that in a Sistra's engagement, the Sistra's licensed CPA evaluates a company computer system using the trust service principles and criteria. So Sistra's is designed to evaluate and provide assurance about an organization information system, ensuring their reliability. So they have a five trust service principle, which is a security, availability, processing integrity, confidentiality and privacy. So, for example, an e-commerce company might use a Sistras to ensure its customers that their data is secure and transactions are processed accurately. This builds confidence, strengthens brand reputation, and also fosters customer loyalty. The service provides assurance to management, directors, and third party about the reliability of information system used to generate real-time information. That means to dive deeper, Sistra's engagement aim to provide a reasonable assurance about an organization system. This assurance extends to all critical operation such as a real-time processing of financial transaction or secure storage of customer data. Here, a real world scenario, which is consider a banking institution that processes thousands of transactions daily. So, Sistras evaluates whether their system is robust enough to handle high volume while maintaining accuracy and security. Moreover, Sistras is not just about the compliance; it's about improving operational efficiency. Organizations that invest in this engagement often identify gaps or inefficiencies in their system, which can then be addressed to optimize performance. Next is learning objective 5, which is a describe engagement to report and on internet controls at a service organization. In Objective 5, it introduced to internal control reports, particularly at a service organization. These reports, prepared under the ISAE 3402 standard, serve two main purpose, which is a Type 1 and Type 2 report. So, let's we go to the next slide. In this slide, explain the internal control reports, which are essential for ensuring reliability and compliance in the service organization. These reports assess how well controls are designed and whether they operate effectively over the time. So, under the ICAE 3402 framework, there are two types of reports, which is a type 1 and type 2. That the type 1 focus on the design of control, asking are they set up correctly to meet an objective, and for the types to evaluate whether these controls are effective over a period of the time. So I give you an example, which is a payroll system need this report to ensure a client that salaries are processed accurately. Similarly, healthcare system rely on them to demonstrate that the patient data is secure. This report help build this trust with the stakeholder, prevent error and fraud, and ensuring compliance with the industry regulations. Next is a learning objective 6, which is to focus on the prospective financial segments. These segments are forward-looking and help organizations plan for the future financial outcomes. So let's explore the details of prospective financial segment in the upcoming slides. Let's go. In this slide, it's explained the concept of prospective financial segments, which help the organization anticipate the future financial performance. There are two types, which is a forecast and also projections. The forecast, these are based on the management's best estimates of what is expected to happen, such as the future sales growth and the market condition. For the projection, this explore what if a scenario. It's like the impact of the launching a new product or entering a new market. These segments are used for various purposes, including the planning, budgeting, and making informed investment decisions. In this slide, it's focused on the examination of the prospective financial segment, which are guided by the standard such as ISAE 3420 for pro forma financial information and ISAE 3400 for prospective financial information. Auditor evaluated three key areas, which is the first is the preparation process in is that ensuring financial statements are created consistently and reliably. The second is the assumption, which is checking if they are reasonable and aligned with the organization's goals. And the last is the evidence and data, which is verifying that there is sufficient support for the assumption. Through this examination, auditors provide moderate assurance, helping stakeholders trust the validity for these segments. Last for my part is examination of the prospective financial segment. What can I summarize is these segments are based on the assumption about events that have not happened yet, which means they are speculative and uncertain. While there might be evidence to support this assumption, the evidence is often future oriented and not entirely reliable. So auditor cannot guarantee that the results shown in the statement will actually happen. Instead, they review whether the assumptions are realistic and suitable for the segment, and they provide moderate assurance on this. So that's all for my part. I will pass this presentation to the next presenter. Thank you.
Hi, my name is Norakila Izzati binti Murad and I will continue to present about examinations of prospective financial statements. A forecast is a financial prediction based on what management thinks will happen in the future and what actions they plan to take. It uses the best guesses available at the time it is created. A projection is a financial prediction based on the first one is hypothetical assumptions. These are what if scenarios or imagining events or actions that might not actually happen. And the second one is a mixture of best estimate and hypothetical assumption. Prospective financial information is about predictions for events and actions that haven't happened yet and might not happen. The assumptions used are based on future possibilities, so they are uncertain and speculative. Auditors don't need to prove that every assumption is true. However, they must check that the assumptions are logical, consistent, and make sense for the purpose of the financial forecast. If the assumption seems clearly unrealistic, the auditor cannot approve them. Learning Objective 7. Describe agreed upon procedures engagement. The auditor only performs specific tasks that have been agreed upon beforehand. They don't review everything, just the area specific. This type of engagement is also known as procedures and findings engagement. These engagements follow ISRS 4400, which provides the rules for conducting them. This engagement involved the auditor performing specific checks on selected financial data such as number 1, accounts payable or account receivable, checking amounts owed by or to the company. Number 2, purchases from related parties, reviewing transactions with associate or connected entities. Number 3, sales and profit of a segment, examining financial performance for a specific business segment. And the last one is compliance of purchasing or sales departments, ensuring these departments follow rules and policy.
Hello, my name is Sasha Elina binti Hamdi and I will proceed with the Learning Objective 8 in which to describe the other audit and limited assurance engagements related to historical financial statements. As for ISA 800 or International Standard on Auditing 800 is a standard that provides guidance on how to apply international standards on auditing to audit the financial statements prepared for special purposes audit engagements. And as for ISA 805, it covers the special considerations for audits of single financial statements or specific elements, accounts, or items of a financial statement. Going on with the ISA 800, the auditors report on special purpose audit engagements. First, the financial statements prepared in accordance with the special purpose framework may be the only financial statements an entity prepares. Second, in such circumstances, those financial statements may be used by users other than those for whom the financial reporting framework is designed. Third, in the case of special purpose financial statements, the financial information needs of the intended users are a key factor in determining the acceptability of the financial reporting framework applied in the preparation of the financial statements. The following are the examples of special purpose frameworks. First is the tax basis of accounting for a set of financial statements that accompany an entity's tax return. Second, the cash receipts and disbursements basis of accounting for cash inflow information that an entity may be requested to prepare for creditors. Third, the financial reporting provisions established by a regulator to meet the requirements of that regulator, or four, the financial reporting provisions of a contract such as a bond, indenture, a loan agreement, or project grants. Moving on to ISA 805, audit of single financial statements and specified elements, accounts, or items of a financial statement. Auditors are often asked to audit and issue reports on specific aspects of financial statements, referred to as reports on a component of financial statements, and materiality is defined by the item audited. Single financial statements, specified elements, accounts, or items. The engagement to audit single financial statements and specified elements, accounts, or items of a financial statements is where the audit performed is less than the full financial statements and the report issued is only on specific aspects of the financial statements. In single financial statements, specified elements, accounts, or items, there is a reasonable assurance given on the audit and auditor to extend their audit efforts to include other elements, accounts, or items that are interrelated with those being audited. Here are the examples of specific elements, accounts, or items of a financial statement. First, accounts receivable, allowance for doubtful account receivable, inventory, the liability for accrued benefits of a private pension plan, the recorded value of identified intangible assets, or the liability for incurred but not reported claims in an insurance portfolio, including related notes. Second, a schedule of externally managed assets and an income of a private pension plan, including related notes. Third, a schedule of net tangible assets, including related notes. Fourth, a schedule of disbursements in relation to a leased property, including explanatory notes. And last but not least, a schedule of profit participation or employee bonuses, including explanatory notes. Next, I'll present to the next presenter.
Hi, my name is Ameh. So now I am presenting about due diligence review. Okay, so before we proceed further, I'm gonna ask, what is due diligence review? Due diligence review is a comprehensive appraisal or investigation into a business, or it can be investment opportunity. It is conducted by a prospective buyer investor, or it can be business partner. So what is the purpose of due diligence review? The purpose is to gather relevant information. With what the information that they had, it helped assess the risk or opportunities associated with the transaction. This process is crucial as it is often performed during mergers, acquisitions, investment, or partnership. This is to provide stakeholders with critical information for decision making. This is also to ensure that there are no hidden risks or any liabilities. So for the next point is due diligence review typically involve a thorough examination of various aspects of the target entity, such as its financial performance, operational capabilities, legal and regulatory compliance, intellectual property, customer and supplier relationship. It is like you are checking under the hood before you buying a car. In short, due diligence review helps you make better business decision by truly checking the target company. The scope of due diligence can be varied depending on the nature and the transaction of the industry that involved. Due diligence review is a very critical step in decision making process as it helps the party that involved to identify and understand potential risks, liabilities, and opportunities associated with the transaction. It is also allows for more informed negotiations and can influence the term and condition of the deal. Okay, so there are like plenty of common types of due diligence review. But for now, I am talking about number 1, financial due diligence. Okay, what is financial due diligence? Financial due diligence is examining the financial health and performance of the target company, including its financial statement, assets, liability, revenue, and expenses. We review all the stuff that I mentioned before. It is to understand its performance. By what performance that I meant is, it is like, let me give you an example. Example number 1. Profits are shrinking because of rising costs, even though revenue are growing. Number 2. Inventory is overvalued and some store lease will expire soon, which could impact sales. Number 3. There are overdue customer payments that haven't been properly accounted as bad debt. My second type is legal due diligence. What is legal due diligence? It is assessing the legal aspect of the target company, including contracts, litigation, intellectual property rights, regulatory compliance, and any other legal issues. Meaning that we check contracts, lawsuits, intellectual property, and compliance with law. From what we check, we can actually find out that 1. A major customer contract can be cancelled on short notice, which is a risk. 2. The company is involved in a lawsuit with former employee, which might lead to penalties. 3. While patents are secure, one trademark renewal is overdue. 4. Data privacy practice need to be updated to meet the new regulation. So for the type of 3 is operational due diligence. Operational due diligence reviewing the day-to-day operation of the business, including its management structure, business processes, and key personnel. What they mean here is this involve reviewing the company daily operation, management, and key processes. What are the example of it? 1. The management team is experienced, but there is heavy reliance on a few key individuals. Number 2. Some business processes are outdated and could be improved for a better efficiency. 3. Employee turnover in critical department is higher than average, which could affect operations. Okay, number 4. Commercial due diligence. Commercial due diligence is evaluating the market competitions and overall industry dynamics to understand the commercial viability of the investment or acquisition. In simple meaning, it is focused on the market, competitors, and industry trends. So there are also an example for this. Okay, first one, the market show strong growth potential, which is a positive sign. Second, competition is increasing with a new player offering similar products at a lower price. 3. The company has a solid customer base but needs to diversify its offering to stay competitive. We move on to the point number 5. So we are at number 5, environmental due diligence. Environmental due diligence is investigating potential environmental liabilities with environmental regulation. For what that I can give you an example is like the company complies with most environmental laws, but one site has minor pollution concerns that need addressing. Example number 2, waste management practice require improvement to meet new local standards. Number 3, there is no record of significant environmental fines or penalties. For the point number 6 is technical due diligence. If applicable, assessing the technology and technical asset of the target, such as software, patents, or other intellectual property. Okay, what does this statement saying is, it is focused on the company technology and intellectual property. Here are the things that I find from the statement. From this point, I'm saying the company owns several valuable patents that are critical to its operation. Next one is the IT infrastructure is functional but outdated, requiring upgrades for scalability. Last one is a key software product has potential security vulnerabilities that need to be resolved. So that's all for me. Thank you for watching.